Over the past couple of days, the stock market has been moving in a very wild and stupid way. Like looking intraday at the market, around open, the market was pretty flat and there wasn't any real momentum, but then out of nowhere, it just started ripping to the upside quicker than basically anyone was expecting. And everyone was like, why? Like there wasn't any great news that caused this. It just started to rip and, stocks were just blasting to the upside. But the thing is we didn't have any crazy news to justify this. Technically, we had Janet Yellen testify ahead of the Senate Finance Committee, but realistically, she didn't say anything too crazy or too out of the ordinary, yet that resulted in a giant move in the market. I mean, shit. We have some stocks like Nvidia up 4%, AMD's up 7%, and a lot of other stocks are just ripping in a big way, right? And a lot of people are like, what's causing this? And is this move truly justified given all of the, I guess you can say, bad things we have going on in the market right now, especially in the financial sector? And the thing is, it goes hand in hand with just volatility overall. A lot of people think in times of like uncertainty or fear or just panic that all of the moves are to the downside, but it's just really not true at all. I really don't think many people really understand how many powerful green days there were in February and March of 2020. Overall, February and March of 2020 was a brutal time for the stock market, and it was one of the quickest and most violent stock market crashes in history. But when we look at this on a more specific level, we can see throughout this shitstorm of a stock market crash, there were actually a lot of big green days sprinkled in this mix, right? And they were overwhelmed by just the absolute brutal selling pressure of the red days. But when you look at it, it wasn't as red as you might think in terms of day-to-day candles, right? And if we look at the stock market right now, we'll see that, some days we have just horrible red days in intense selling pressure. But other days, we have the market blasting up. And the reason that I'm even noting this is because this is most likely what will happen going forward. So for example, right now we have the Volatility Index somewhat elevated. Over the past week or so, it got up to around the 30 level. The Volatility Index is a direct expectation of volatility going forward. The higher this thing goes, the more crazy and more volatile the stock market is expected to be. Over the past couple of months, the volatility index has been pretty low, but now we're actually starting to see it pop back up, which not only is usually associated with selling pressure, but it's just associated with volatility and just crazy moves overall. So basically what that means is right now we have volatility expectations on the rise for the most part. And what comes with that is crazy moves, and basically that means that you don't always need news to justify big moves. So for example, we might see the stock market blasting up right now basically on no news, but there's nothing stopping it from just completely collapsing later in the day. Or let's say you have the stock market pretty bearish around open, right? Let's say there's a lot of selling pressure in pre-market. There is nothing that stops the market from blasting higher and just closing severely green on the day. That's just because volatility overall is just increasing, and that's the environment that we're in right now. Looking at the seasonality of the market right now, we could see that I guess you could say middle to end of March tends to be mostly positive, but there are, on average, a couple decent red days sprinkled in the mix. So if we go back to, let's say, TradingView right now, we can see, on March 16th, it's been a pretty good green day so far, and, historically, on average, over the past 30 years, the 17th day of March and the 18th day of March tend to be pretty good. The 17th day of March ends up being positive 74% of the time, and the 18th day of March ends up being positive 60% of the time. And the average returns for these days are pretty good, sitting around 67 or 0.67% and 0.27% respectively. So that's good to see, but, looking forward, we also have a lot of nothingness ahead of us, as we get through day 19 through day 25. So, on multiple different angles, the market's at just a weird point right now. But the biggest thing I think is worth looking at is where is the money flowing now? Because that's the biggest thing. Where's the big money flowing? What's everyone selling? What's everyone buying right now? And a ton of money has been flowing into safe haven assets like treasuries, or you could say like gold, like silver, stocks like that, where basically everyone goes when shit's hitting the fan, right? That's why gold prices have been booming over the past, week or so. Silver's been doing decent as well, but treasuries out of everything has been doing very, very great. If we look at this chart on CNBC of the 2-year treasury, we can see basically from the beginning of 2022 up until where we are now, March of 2023, this 2-year treasury and basically all of their treasuries have been doing nothing but going straight up in terms of their interest rates, right? So what we are actually seeing right now are treasury rates falling a very significant amount because everyone is buying them. And essentially what this means and why this is a big deal is because it shows that people are literally resorting to like some of the safest assets you can find in the entire market, which is US Treasuries. What's also worth noting is because of all this panic and craziness going on in the financial system, we're actually having lower interest rate hike expectations going forward. So right now, the current Fed funds rate is between the range of 4.5 and 4.75%. Right now, there's only expected to be one more hike of 25 basis points, which would bring the range between 4.75% and 5%. But after that, there are no more rate hikes expected going forward, and the market's actually expecting the Fed to actually cut rates by the end of 2023, which is very interesting. As the years go on, as we get into 2024, you could say rates are expected to even fall, which is very interesting. But the main thing that we have going on right now is a severe lack of good news, but we don't have quite enough panic right now to really see the same level of selling and pure panic that we saw, like, let's say in March of 2020 or even, in certain parts of 2022. We're at a point right now where sometimes stupid news can completely explode the market. And I don't think this type of craziness will go away. I think we're going to have a lot of situations similar to what we have right now, where you could have basically no news come out, yet you could have stocks like AMD ripping up 7%, or, even just the market overall booming to the upside. So what I think going forward is expect big moves off of no news, because that's what we're seeing right now, and there's no real reason for that to go away, especially with the VIX at this level right now. What's also worth noting is that, what you really have to keep in mind is like looking at what truly drives the market and which stocks have the biggest influence. It's mainly tech stocks, so I've said this a million times, but not all stocks in the S&P 500 are created equally. A company like Apple and Microsoft have a much larger, or companies like Apple and Microsoft have a much larger influence on the stock market compared to a company like, let's say, McDonald's and Disney, right? All four of those companies are giant powerhouse companies, but ultimately the tech stocks and the big tech stocks are what truly dominate the market. So companies like Apple, Microsoft, Amazon, Google, stocks like that, right? Looking at what those stocks are doing will be the key to seeing how the market will hold up. At the end of the day, if you have Apple and Amazon and Google ripping to the upside, it will be very hard for the market to turn over because these stocks have such a large influence, a direct influence on the market. So day to day, by looking extra close at, companies like Apple, Amazon, Google, Microsoft, stocks like that, they will give you a very good hint as to, what the market is likely to do, in the same way where if these stocks are just ripping to the upside, it'll be hard for the market to fall. Even if we have all other industries, in the green on a specific day, whether it be health stocks or, value stocks or whatever, right? If they're all green, but if you have Apple and Microsoft and Amazon and Google tanking to the downside, there's a good chance the market will roll over. So you definitely keep that in mind. But overall, this crazy volatility, especially with big moves on no news, is not going away in my opinion. So be prepared for that. And keep in mind that, you don't have to wait for news in this type of environment, because we're shifting right now. We're shifting to a legit, more volatile market environment, and we can directly tell that by the VIX. So it'll be a crazy next couple weeks. Definitely buckle up. If you guys liked the video, make sure to subscribe. Besides that, let's have an amazing end to the week.